Tom Lee, he is with us here at Post 9. Welcome back.
Thank you, Scott.
What do you think? We just got a little, ahead of ourselves, or I don't know. Maybe we just need a breather because it's been remarkable.
Yeah, that's right. I wouldn't be surprised if there's some profit taking today. I don't think it changes the case that stocks are probably going to do very well between today and the end of the year, and we get a pretty important report on Friday, which is PCE deflator.
Yeah, you surprised that this market has continued to just ramp higher, almost unabated?
I think there was a sequence of events that justify the move, because we know last week we got a Fed that has made a dovish move, ending its inflation war or shifting it towards managing the business cycle. We know that 65% of fund managers are underperforming their benchmark, and we know $240 billion was pulled out of equities. So between now and year end, which is a small window, you do have fund managers trying to catch up, and I think a lot of investors reorienting their portfolio towards a nicer Fed, a less hawkish Fed. And I think stocks are up. Investors need to allocate to stocks.
Unless investors need to take a breather themselves. I had a conversation yesterday with Eric Johnston of Cantor, who's been as bearish as you've been bullish, and told me he just can't show up now and all of a sudden change. Here's why.
I would not be able to come here and say high conviction bullish based on the current multiples, where we are in the cycle, where earnings are, where positioning are. It's just not even close. Okay, what I would need is to see either a recession or close to a recession where people think that it's coming. We get a big growth scare, and the unemployment rate starts to go above 4%, a little bit of a cleansing, and lower prices.
In other words, you're going to get all bulled up, even more so now with multiples expanding to where they have?
Well, as you know, valuation isn't really why anyone should ever sell a stock, nor why they should buy a stock. It really should be whether earnings momentum is accelerating. And next year, it looks like capital spending is going to pick up. There's a lot of surveys showing this, and there's a gap between the hard and soft data. So there's a CapEx cycle. We also know mortgage rates could drop to something like a 4.75, 5.2 next year.
Well, that's not ahead of ourselves a little bit?
That would be taking a normal spread to the current 10-year. And that 200 basis point drop in mortgage rates, we know, would stimulate the consumer and re-liquefy regional bank balance sheets, which is an earnings story, too. So I'd say earnings momentum picks up next year. We have a Fed that's trying to at least maintain the business cycle. And investors are bearish. There's a lot of anchored views. We just heard one clearly articulate that they're going to only turn bullish if there's a recession.
Yeah, but I feel like the bears are kind of dropping like flies now, right? There aren't that many of them. I've seen some strategists who were very bearish over the course of the last year suggest, stocks can continue to go up. This Fed pivot is that powerful. The other side of that, though, is what Eric Johnston and others would suggest, that it's a little too early to think that earnings are going to live up to all of this hype. A lot of hype that you have. Your earnings number last time you came here, the best case
for 2025,
amazing case, unbelievably incredible case was like $280.
But
do I remember that correctly?
Yeah, you are, Scott, but that's not a prodigious feat. It's about a 10% CAGR. So it's like saying 5% from buybacks, nominal GDP, and weaker dollar get you there. I don't think it's a lot to ask to get to 280 in earnings. But I think most importantly, the market internals don't speak to what happens at a top. This is really early cycle behavior, a huge expansion of market breadth. Stocks really peak when you get good news and they go down. We haven't had good news. Today's sell-off isn't off some great headlines. It's just year-end rally.